Metal Exchange are again on the downside this morning on Thursday, the 4th of March. The London nickel price on the 3-month future slumped about 8%, and prices on the metal Shanghai Future Exchange also dropped the most in 9 months. Actually, after a major deal by a Chinese firm, Tsingshan, eased some worries about battery-grade nickel supply shortage. So that had been definitely priced in the market. The 3-month nickel price on the London Metal Exchange is losing about 7% right now. It's trading at $16,060 a ton. If we look at the copper price, copper is losing more than 4%, actually 4.3%, trading right now at $8,220 a ton. Aluminium is losing 3.4%, trading at $2,140 a ton, the 3-month price. Zinc is losing 2.5%, trading right now at $2,714 a ton, and lead is losing 1.2%, trading at $2,017 per ton, and tin, which has also lost some ground during the last days and weeks, is right now losing 2.2%, trading at $23,300 a ton. Volume is still pretty good, about 10,000 lots of copper traded so far, more than 9,200 lots of aluminium, and about 8,000 tons of nickel. So volumes are still, since the Chinese market participants are back on the market, pretty good. If we look on the news side, on the metal prices, of course, Norilsk Nickel is expecting some production losses, as actually 2 of their main mines remain partly suspended, and that's due to an increase of water, actually, as their CEO Vladimir Potanin said. So this shortage of material not coming into the market is of course also priced right now in the forward prices. Also on the zinc side, the zinc treatment charges, what the miners have to pay to the smelters to refine actually the concentrate, are expected to fall this year to $200 per ton, after we had the latest treatment charges of about $300 a ton. And that is definitely due to also a tight mine supply, as the analysts are saying. If we look on the precious metals prices, the gold prices rose today, and it's actually rebounding from a 9-month low, which was hit in the previous session. But of course, the rising US Treasury yields are continuing to weigh on the non-yielding bullion. That is the reason why actually the spot gold price is only rising 0.5%. We are at $1,719 the ounce this morning. As one trader said, it's just a technical bounce. The broad fundamentals are still on the downside for gold. The dollar reversing, the US yields rising have been negative for gold. So he says that the gold safe haven appeal has definitely reduced. If we look on the currency side, we can see that the euro is holding at least the 120 level. It's losing a little bit. We are right now at 120.33. So not big movements actually on the forex markets. And if we have a brief look at the economic calendar today, we had the German construction PMI coming out already. We will have data on the EU retail sales, on the EU unemployment rate. Later on this afternoon, we will have a look definitely at the US initial jobless claims. We will have the factory orders, and there will be another speech from Powell, from the Fed chairman, which could give an impact to the market. But otherwise, we are still on the downside. We are having price corrections, and that seems to be right now the scenario for the next days.